Assalamualaikum everyone. Today my teammates and I will present our chosen sole proprietorship business, which is Wahibah Resources. Let me introduce our team member. From the left hand side, Nur FATIHAH binti Muhammad Zakrey, FATIN Nur AFIQAH binti AZMI, and Nur Sarah binti Muhammad NAZERIN. Introducing the owner of Wahibah Resources, Mr. Muhammad Ikhwan bin Zainal.
Next, I will explain further about the background of the business. Wahibah Resources strives to be the area's top building construction company. This entails having the most efficient facilities, processes, and personnel available at all times. Wahibah Resources is engaging in a variety of strategies to achieve this, which will result in competitive benefits for its client. The company is a Putrajaya-based sole proprietorship business. The management team of Wahibah Resources is highly skilled and experienced. With over 6 years in the construction sector, Mr. Ikhwan Zainal leads the management team. Wahibah Resources has created advanced formwork solutions for some of today's residential building projects in Putrajaya. Building and repairing residential constructions such as doors, cabinets, parking spaces, and almost any other sort of construction are among the applications. Standard form systems from the company are versatile and adaptable to a wide range of layouts. The Wahibah Resources system can be adapted to almost any construction requirement that calls for forming. The company's expert staff has the capability to design and manufacture any custom component or accessory item that may be required to complete the project. Owner's capital or owner's equity is the equity account that indicates the owner's stake in the business. For sole proprietorships, the owner's capital account is usually used. Wahibah Resources' owner's capital started with 10,000 ringgit Malaysia. The company plans to rapidly develop marketing alliances with industry leaders and pursue new sales of its services to residential builders. Wahibah Resources will anticipate their demands and follow through on every promise. I will also be discussing the characteristics of the company. Business refers to operations that include the creation or acquisition of items that people want and then selling them for a profit. Stevenson describes business as the regular production or purchase and sale of things with the intention of making profit and attaining riches via the satisfaction of human desires. Thus, there are some essential characteristics successful businesses have in common. One of the business characteristics in Wahibah Resources is involved in economic activities. Business is fundamentally an economic activity because it entails the manufacture and distribution of commodities and services to meet human needs. It offers job opportunities in a variety of areas, including finance, industry, and commerce. As a result of business, more job possibilities are created, resulting in economic expansion. It promotes the country's industrial and economic development. Wahibah Resources runs a business such as repairing buildings and maintaining landscape. Furthermore, Wahibah Resources business features include a profit motive. Profit is a barometer of a company's success or failure. The basic purpose of most businesses is to make the most money feasible through the production and selling of goods and services. Profit is necessary for a company's survival, growth, and expansion. Business has numerous objectives, but the basic goal of every company is to make money, and it is necessary to generate economic growth. Wahibah Resources makes a profit by providing contracted service to the customers. They provide a quotation to the customer, and if agreed, they will perform the work according to the customer's wishes. As a result, they will get a profit for every tender received by the customer. Last but not least, Wahibah Resources business qualities include risk and uncertainty. Risk is defined as the possibility of loss as well as the impact of uncertainty on a company's objectives. Profitability is frequently influenced not only by a company's efforts, but also by a variety of other factors over which it has little or no control. Taxes, changes in expected sales volume, cost of supplies and equipment are all predictable factors identified by Wahibah Resources. changes in client patterns and taste, the impact of the local economy on the customer base, and any unforeseen measures done by the competitors are all examples of unpredictable factors. Wahibah Resources' performance depends on its ability to calculate and manage risk. Insurance and risk management assist in minimizing business-related risks. In conclusion, business is a collection of organized activities for the production and exchange of products and services with the goal of profit. Now, I will pass the time to the next presenter, Nur FATIHAH, to explain to us about the classification of business items.
I will present about the classification of business item. The classification of business item are asset, liabilities, capital, revenue, and expenses. Wahibah Resources had tool, machine, office equipment, and furniture as their business asset. The creditor for Wahibah Resources are Zain and Pine, and they got a long-term loan from Mara and Tekul. For capital, Wahibah Resources owner capital start with 10,000 ringgit. Their revenue are service and sale of gold. Lastly, their expenses are worker salary, rent, and utilities bill. That's all for classification of business item.
Accounting for sole proprietorships differs significantly from those of other types of businesses. Because the owner is regarded as inseparable from the firm, it does not require a separate set of accounting records. However, it is necessary to keep track of company activities to determine whether they are profitable. Wahibah Resources has a simple accounting system that is appropriate for small sole proprietorships. For income statement management strategies, there are 6 easy processes in recording process. Establishing solid financial procedures and system to monitor a company's financial health is a crucial component of running a corporation. Starting with a list of chart of accounts is the first stage implemented by Wahibah Resources. Every transaction that the company does must be classified into an account. A category for all income, sale, and expenses is called an account, supplies, insurance, and bank fees. Keeping track of all different types of accounts in accounting might be difficult. Then, to stay organized, the staff might make a chart of accounts. It's critical to keep the business book of account up to date by recording transactions in the relevant accounts when buying or selling goods and services. This demonstrates that all the money flows in and out of the company. We will also be able to check how much money that we have in each account. Typically, organizations create a chart of account to list their accounts. Account charts make it simple to organize account kinds, number each account, and locate transaction data. Step 2 is gathering data about commercial transaction. Log into the bank account and credit card each month and download a copy of the bank statement and monthly credit card statement in PDF format, as well as all monthly transactions in an Excel spreadsheet and interact e-transfer history. All these files, as well as all the sales invoices, bill statements, and receipts will be saved into a folder. It's worth noticing that Interact e-transfer transaction and bank history downloads from the online banking account are normally only available for 6 months. Step 3. Arrange transaction in a logical order. To compile financial statements and make company decision, sort and track transaction using accounts. Each month, paste the transaction spreadsheet into the income statement form. Assign each transaction to an account category and record the amount of each transaction in the income statement template's monthly worksheet. Wahibah Resources adds expenses that are not shown on the bank statement in the 4th step. If a payment is made in cash or with a personal card, manually enter the transaction. To make things easier, pay for anything related to the firm with a business bank account or credit card. To avoid withdrawals that affect company revenues, pay for personal and home running expenses through a personal bank account. Next, the 5th stage is to create an income statement or profit and loss statement. Now, time to fill in the blank and create an income statement. In the monthly tab, enter all sales invoices for each month. Then enter amount for the expenditure account. Refer to the annual tab to see the total number of years. It is possible to view net income, which is revenue minus expenses. Lastly, determine that the cost of running a home office. Fill in the blank with rent, utilities, cell phone, and internet. Some of these may be disqualified. Generally, the last phases in the accounting process combine all the data collected in the previous steps and present it in a financial statement format. The steps are as follows. Construct a trial balance. The trial balance is a list of each account's final balance in the trial balance. The sum of all debits must equal the sum of all credits. Otherwise, an error in the original transaction entry must be investigated and corrected. Next, make a necessary adjustment to the trial balance. It may be essential to change the trial balance during the term, either to correct errors or to make certain allowances, or to accrue for revenue or expenses. Provide a trial balance that has been changed. This is the original experiment's balance, adds or remove all subsequent changes. Financial statements should be prepared. Adjusted trial balances are used to create financial statements. The balance sheet is made up of assets and liability, whereas the income statement is made up of revenue expenses line item. After that, it times to call it a day. The balance in the revenue and expense account is transferred to the retained earnings account, which is the left vacant and ready to receive transaction for the following accounting period. Finally, after shutting prepare the trial balance, all revenue and cost accounts should have zero account balances in the version of the trial balance.
Next, strengths and weaknesses of recording process. First and foremost, the strength for recording process is the usage of the recording process in accounting is a comprehensive system that is meant to capture all identified and expert costs at the time of recording, and it is utilized consistently throughout the reporting period. As a result, being organized throughout the process can be crucial component in ensuring overall efficiency. The length of the recording process is determined by the reporting requirement. Most businesses set to examine their performance monthly. However, some may be more concerned with quarterly or annual outcome. In any case, most bookkeepers will be aware of the company financial situation daily. Overall, setting the length of each accounting process is critical since it establishes opening and closing date. When a recording process ends, a new one begins, resuming the step accounting procedure from the beginning. Secondly, the allocation base for some share costs are reviewed on a regular basis. Cost allocation should, in theory, reflect a causal relationship between costs and the object to which they are assigned. The most common goal of joint cost allocation is to link input costs to the economic benefits received. These methods are suitable for financial reporting, but due to inherent arbitrariness in joint cost allocation, caution should be exercised before using the data for decision making. One of the primary goals of cost allocation is to provide that data for decision making. Cost allocation is a crucial technique for cutting expenses and generating profitability. It can also be used as a cost motivator, with managers be rewarded for ensuring that costs are not amassed irresponsibly. Managers will be more likely to run their department more efficiently as a result. Finally, managers are well versed in the costs for which they are responsible. The word responsibility accounting refers to accounting system that gather, summarize, and reporting accounting data pertinently to manager duty. A responsibility accounting system provides data for evaluating each manager revenue and spending items that are within his and her control. The item that the responsible management can control are listed in a responsibility accounting report. When a report contains both controllable and uncontrollable items, accountants should clearly divide the category. In a responsibility, accounting and reporting identify controllable objects in a critical effort. To apply responsibility accounting in a corporation, the corporate organization must be established in such a way that Individual manager can be assigned responsibility. Next, witnesses. One of the most typical way to start business is as a sole proprietorship. It is important to wait the witness to determine if this is the best strategy. Wahibah Resources witness with process recording is that financial and company credit are more difficult to combine. We may have a harder time obtaining financial and business credit as a business entity than a corporation. A corporation is eligible for government assistance and can easily raise capital. In most cases, a sole proprietorship is unable to do so. One of the reasons for this is because corporation has a legal distinction that a sole proprietorship does not. Following that, there are lack of financial control and difficulties keeping track of costs. Because financial reports are normally required as a routine aspect of doing business, and because one person serves as accountant, manager, marketer, and strategy all in one, single entrepreneurs are prone to overlooking financial transactions. This can be lead to a considerable loss of financial control, as well as the possibility of combining commercial transactions with personal income, making it difficult to keep track of costs. Profit and losses may go uncounted in certain situations, making that time even more challenging. Finally, there is no liability protection. Personal liability is one of the advantages of the sort of company structure. We are completely accountable for our company financial operation. That means we are responsible for all bills and any legal proceeding. As a result, our personal assets are exposed, putting our money at danger. Separate business insurance is a smart idea in this instance. It is one of the most important distinctions between a single proprietorship and a corporation. With incorporation, this business or legal entity is exclusively responsible for its action. In conclusion, despite all the fantastic advantages that sole proprietorship has to offer, there are few drawbacks that business owners should be aware of before deciding on this structure for their company.
That's all from us. Thank you.